Morris.
As Doreen was speaking, I needed to ask and request that we all have the Hoover app. I hope you have downloaded the app. The entire program she's mentioned is on the app. You can actually also find any other information, right from getting your taxi from the hotel to this location. However, she did mention we have parallel sessions in the afternoon. They're right behind us, in the tent behind us. You should be able to find a particular session you're interested in. If you did log in online and replied our email, you might have then seen a particular session you're interested in. So you can then decide which of the halls at the back you will be going to, because each of the sessions has a specific hall where the presentations will be taking place. My name is Maurice Mugisha.
And my name is Joy Doreen Bira. So for those of us who would like to use the washrooms, I'm going to call them toilets because I think it's the simpler word to use. To your left, to my left, I guess, and to your right, you're going to see a number of mobile toilets outside there. And if you want to meet up with any person, there are tents on both the left and the right that you can use for business meetings as well. There are waiting rooms right outside, so you can please take advantage of those and do the needful. So without further ado, would like to put our hands together for the Sarakasi dancers.
Ladies and gentlemen, put your hands together for the African cultural performance by Sarakasi.
By the traditional brick and mortar. And it's good to see, I think, I see KCB on the KCB here, I see other banks here, and to see the reports that they have released exploring further avenues for collaboration in fintech. And today, there are fintechs that provide our county governments with solutions for process of payments and collection of taxes. The financial services sector, such as the banks, are actually using some of our platform capabilities to deliver more relevant products and services. We have seen a collaboration of banks launch an SME product, which is very innovative, called Stawi. And I think for some of the fintech people in this center, I hope there will be a presentation on Stawi and the opportunity that it does provide for SMEs. We've also opened up our APIs. Today, over 16,000 developers are plugged into the M-Pesa APIs. And this enables innovation not to be about Safaricom, but about the fintech community providing relevant products and services to their customers. We are committed to investing in the platform. Over the last couple of years, we've invested over $100 million in ensuring platform stability, scalability, resilience, and also protecting from cybersecurity. In addition, collaboration with global partners such as PayPal, Google, and recently Alipay that have enabled Kenyans access the e-commerce space worldwide, as well as the world being able to access Kenyan goods and services via e-commerce. Financial inclusion is a term we do not use lightly. But again, financial inclusion is good, but financial inclusion should be for all. In Kenya, over 1.4 million Kenyans are visually impaired, and those people need to be included. Together with a fintech in South Korea, we launched last year the first dot braille watch in the world, and this is the one I'm wearing. So this watch enables the visually impaired persons to perform transactions as well as anyone else with a mobile phone. We've also invested heavily in providing IVR facilities in our call center to be able to provide the visual. These examples all represent in the room. We need to figure out how to develop more relevant products and services to move Kenya to a cash-like society. It has been done in China, I think, over the past 5 years. Alipay and WeChat Pay have actually basically eliminated cash in China. It is estimated, but we need to have a robust challenge. Colleague and boss, Bob Collymore, in his last thought speech, he wrote, and I quote, "These are exciting times for ICT in Africa, and companies such as ourselves are the cusp of something great. We're in a position to lead the fourth industrial revolution, to boost the continent's digital economy, supported by young, empowered, and digitally connected population. The question is, are we ready to invest, collaborate, think different, and take the risks that will position us favorably to tap into these opportunities?" And my own personal wish is that from this conference, a fintech unicorn is born out of this two-day conference. Thank you very much.
Ladies and gentlemen, another round of applause for Mr. Sitoyo from Safaricom. And as he takes his seat, I want to request we could all stand and observe a moment of silence for the late Bob Collymore, who was former CEO at Safaricom, but also was a key driver in the innovations and the changes. The Asia perspective. Jonathan Larson is the Chief Innovation Officer at Ping An Group, Chairman and Chief Executive.
Very good. Well, good morning, everybody. It's a real honor to be here at the invitation of the Monetary Authority of Singapore and the Central Bank of Kenya, which is creating a global SaaS platform so that you can set up a bank anywhere, anytime. And Anthony has talked about the Uber moment for banking or for finance. In other words, the way in which the traditional architecture and institutional structure, again, can be overturned by technology. Many others have made similar comments, including the opportunity for fintech and for digital technology to play a transformative role in the developing world, and in particular in areas such as financial inclusion and sustainability. FinTech is not just a buzzword, it's a reality and has attracted massive amounts of capital. On the left-hand side of the chart that I'm showing, I hope you can see it on the two. If you go back to 2012 or 13, it was $6 billion, still quite a lot of money by venture capital terms. Last year, it was $43 billion. So this activity involving fintechs, we see much, much bigger numbers again. And Bluefax, which is the largest digital wealth management platform in the world, we raised just $1.3 billion, but at a valuation of $39.5 billion last year. So it's quite interesting that we see the emergence of really significant players from a valuation perspective. And they're not just in China. You can see that on the top 5 here, one is a UK lending and insurance platform, and the last one, Oscar, which we're an investor in as well, by the way, is a very interesting new generation health insurance platform trying to deal with the chronic and crippling cost of healthcare services in the United States using digital technologies. There are over 7,500 fintechs in the world today. There are 5 what we call decacorns, 5 companies that have a valuation of more than $10 billion, and there are 48 companies with valuations of more than $1 billion. And the process of entrepreneurship, of building these businesses, inevitably means many people at the bottom of the pyramid don't make it to the top. That's the law of the law of business, the law of entrepreneurship. But globally, it is a very vibrant sector indeed, and I think we'll see many players that are in the bottom few tiers of this pyramid rising to the top around the world. And if we think about the areas covered now by FinTech, I think if I can ask them to put the slide up, thank you. The areas covered by FinTech, it really is now the whole spectrum of finance. There is almost no area that has been untouched. In payments, we talked earlier about M-Pesa here, but of course the payment revolution in China, where cash basically doesn't exist in the society, almost in 2 stages. The first generation of FinTech going back 7, 8, 9, 10 years, even some examples that go back, like PayPal, for example, going back 15, almost 20 years, really were direct-to-consumer models. And I remember when I used to work at Citigroup, we would go with our management group to visit we can call fintechs feasible to build standalone direct-to-consumer models. But there's an enormous opportunity for fintech to be an enabler for legacy financial institutions. And we see many important companies emerging in this space. And I'll talk about some of that as we go through today. Our previous speaker spoke about some of the driving technologies, and what I have to say is broadly in agreement. We see cloud as fundamental. It is fundamental to the new generation of fintech startups, but it's going to be even more fundamental to the legacy industry. And it is a fact that regulators around the world have really yet to reach an adequate and sufficiently sophisticated and certainly a common understanding of what the cloud opportunity and imperative represents. And the facts are that cloud can deliver more secure, more reliable services than any on-premise facility can at a fraction of the cost. It has to be part of the future here and everywhere else in the world is at this point in time. But nevertheless, most have funds, most have some kind of innovation group, most are really thinking hard about how to digitize their entire business. It's just a long, complicated process. And again, penetration of online wealth management, in particular online money market accounts in China, and of course, very, very broad penetration today, but growing very rapidly of online lending. Secondly, the costs of fintech. It costs a fraction, the magic of mobile, the magic of virtually zero marginal cost for a new transaction, is that when you compare it to the old way, the bank branch, we're talking about typically an 80% plus reduction in unit costs. So it's a compelling economic case. And also a driver of economic growth. This is the China example. China, over the last 5 years, from 2012 to 18, has experienced 8% GDP growth. Their consumption growth has been about 9%. Within consumption, however, e-commerce has been 33%, and within e-commerce and beyond e-commerce, the growth in online payments has been 72%. This by itself doesn't establish a causal relationship, but with other factors that we know about, we know that the online payments and the explosion in e-commerce is driving GDP for this country. There's no question about that, and is helping China navigate its transformation to being a consumer.
Sustainable capital markets in West Africa. And so maybe you can comment on that and the role that you see FinTech playing.
Thank you, Tim, and good morning, everyone. My name is Aurélie Adam Souley. I come from Benin Republic. I serve as the Minister of Digital Economy and Communication in Benin. Also have the privilege to be part of the Digital Financing Task Force, the UN Task Force. And I also had the privilege since last year to share the ICT Ministers Network of the Francophonie, which is an organization, global organization made of 88 countries and states sharing French as a language. So for those who want to know where Benin is located, for those who haven't heard about Benin, how many people knows about Benin? Please let me see. Wow, I'm impressed. Thank you. So Benin is a West African country, and we are part of a regional body, two regional bodies, namely ECOWAS, the Economic Commission actually for Regional Integration, and the WAMU, the West African Monetary Union. So as part of WAMU, we are 8 countries, and we share actually, let's say, same principles in terms of financial and monetary regulations and also guidelines. So what does it bring to the FinTech ecosystem in West Africa in terms of advantage? I'll maybe go through 2 of those advantages. One of them is harmonization of regulations, harmonization in terms of guiding principles, in terms also of sharing strategies on how we want to tackle financial inclusion, how our startups will also bring solution, FinTech solution. And the second advantage I will mention is also about interoperability of systems. For instance, the BCAO, the regional, the central bank, the regional central bank for West African countries is currently building a system so that the mobile money system and also all the settlement system will interconnect and make payment within all the ECOWAS region, make it easier. So I think it's a big opportunity for our FinTech ecosystem, because when they actually address one market, part of those regional bodies, they're able to actually address all the markets, which made it easier for them to be viable and also to propose regional solutions. One other thing, as Tillman was mentioning, of the SDGs, around capital markets, we also have a regional exchange stock, the BRVM, Bourse Régionale des Valeurs Mobilières, which is located based in Abidjan, Côte d'Ivoire. And it also comes with all the advantages related to a regional body. Currently, the BRVM is working toward actually building a resilient and efficient capital market system so that we're able to capture all the value of our population, those people willing to invest, but maybe actually they're not able to do it because of those analog, I would say, analog way of doing, of having access to the capital markets. So those regional bodies are working toward it. And what does it bring to the countries like Benin, part of those regional settings? One thing is that we will be able to capture actually the value coming from our diaspora. You know, in Africa we have a strong diaspora, those people living abroad, wishing to contribute to their countries, contribute to the economy, wishing to bring wealth to the country and also to the population. And I think you will agree with me that if digitalization, fintech solutions are incorporated to the capital markets, like the regional one that we have in West Africa, it will be easier to actually capture this value. The other thing, and then invest also on development projects. The other thing is a big issue in our context is the informal sector. Informal sector which counts for almost more than 50% actually of the economic transaction. And it's a big challenge to also capture the value coming from this informal sector. And using fintech systems, as Jonathan said earlier, will help also bring this value to the country and make it possible to use them to fund development projects, and by doing that to also be able to advance on the SDGs path. So that's basically, Tillman, how we tackling those issues in the West African area. Thank you.
Great. Thank you, Minister. Now we're going to keep moving west to the United States, and I wanted to invite Lawrence to speak. So Lawrence, in many ways, IEX is a fintech. The creation of your company was based on a technological advancement and also combating technological advancement that was taking over the markets in the United States. So I wonder if you could comment on that and just also give some insight into how much technology and fintech is now driving capital markets development.
Yeah, thank you. Thank you very much. So, again, my name is Lawrence Latimer. I'm the head of ventures for a company called IEX Group. And we are a company whose mission is to inspire fairness and innovation. And we do that by creating technology that levels the playing field. And Till, as you mentioned, our genesis is really about solving problems with technology. And in the United States, we'd seen, really in the last 15 years, an incredible amount of innovation in the marketplace, not all of it that manifests itself in a really positive way. And so our first sort of product, if you will, was to create an exchange that was all about leveling the playing field and really helping investors get the best possible experience they could on the exchange. And it was driven by technology. In the last 10 years, we've seen an incredible digitization of our financial markets, particularly on the equity side, but you're seeing that across different asset classes. We've seen an incredible race to speed. So really the proliferation of wireless as well as wireline communication technology.
Capital markets. So I wanted to go back to our panelists and ask them about that. For that to happen, what needs to happen in terms of technology, talent, and policy and regulation if we're really to take advantage of the technology that's available for us with us today to accelerate the development of capital markets in Africa? And with that, maybe I'll start with Lawrence and then come to the minister. Lawrence.
I feel like David kind of gave us the framework that most of us can follow. It's really a handful of things that you need to create that kind of environment that allows for more participation in the sort of the interaction between capital owners and users of those capital, so the fintech firms, many of them in this room, and others that are to be formed. You need good data, right, for investors to make decisions. In order for capital to get where it needs to go.
Existing and legacy infrastructure to move capital from savings to investments, but in reality it's so nice to see that coming out alive in this part of the world. So we've talked initially about investors, we've talked about digital infrastructure. Maybe the last thing I want to talk about is the institutional framework and the institutions themselves. We've talked about the pension funds, we've talked about the central banks too, who've played many wonderful roles and will continue to play a critical role here. But maybe the international institutions can play a stronger, better role too. I'm talking about, say, the IFC, who've played a fantastic role in Latin America and Africa and emerging Asia. And more credit needs to be given to the kind of work they've already undertaken and can continue to undertake. They can be the backstop investors. They can guarantee the kind of investments that might initially be seen as risky and priced at 10% instead of 2%. A classic example, which you may not think about as a natural link here, and I'll finish on this, is going back to infrastructure. Turkey in 2015 had launched a healthcare program called the Elazığ Hospital Program. What they did was they took about 20 acres of land, they built it up, built hospitals and living quarters around it. But to finance that was extremely expensive for the country. Turkey was not in the best of economic position. So what did it do? It went to the World Bank Group. It went to MIGA, the Multilateral Insurance Guarantee Agency that sits within the World Bank Group, and said, look, we need this project to be financed. What do we do? And then it went away to other private sector investors. And between those two avenues, the international institution, that is the World Bank Group, and the private sector investors, it managed to launch a bond that was rated 2 notches higher than the sovereign bond itself. So this infrastructure bond was, AA when Turkish bonds were BBB. It tells you really that there are classic examples in other industries that go beyond finance, beyond technology, beyond fintech put together that we can learn from. So coming together for institutional investors, the kind of digital infrastructure we've talked about, and bringing the investors themselves together will really harmonize the kind of results we're looking for. Asante.
Great, I wanted to thank our panel. So we started off with a big challenge today, which is how do we fund the fintech revolution within Africa, and how do we use that revolution to help fund it? So we'll throw that challenge out to you, and just to put in a plug, we are going to be part of launching a hackathon tomorrow. We invite you all to come at 1 p.m. We'll be putting forward a series of challenges. This is one of them. We would love to hear from you of your thoughts of how we use fintech to accelerate capital markets development in Africa. Thank you very much to all the panelists, and thank you very much to the Central Bank of Kenya, Monetary Authority of Singapore for having us here today.
Thank you very much, Tillman, and your panel for this discussion. As I invite the next moderator, my co-host, Joy, I wanted to mention a couple of things. The festival model doesn't allow us to grant you permission to take a coffee break, right? So what it does, it allows you to stretch your legs by going to the cafeteria area to pick a coffee. So there is coffee. Don't say there was a thin budget. No, there was no thin budget. So there is coffee and there is tea and there will be lunch, right? But we don't want to take those long breaks because they literally distract any wonderful meeting or conference like this. So the festival model doesn't allow us to give you those breaks. But when you want to stretch a leg, want to get a bottle of water or coffee or tea, make sure it's Kenyan tea, you will just walk to the serving center. There will be someone you can ask. Even as you walk, the ashes will lead you there. So you can do that. However, you need to be wearing your tag so we can identify you from the others. So if you have a tag on, you will get free coffee. If you don't, you'll have to buy it. All right? And I'm told they also accept cryptocurrency. I'm getting the kind of this. Okay, Joy, please take to the floor and introduce your panel. please use the app. If you want to ask any question, on the app, you will be able to find the agenda of the day. On the agenda, you'll find this particular session or whatever session you're interested in. You can actually log into that portfolio and then post a question or a comment, which will be picked by the moderators during the panels. Thank you.
Hello there. Hi. Hi. Yeah, that sounds better. And well, our next conversation is going to be focusing on Africa. We've had the different perspectives. Now, would like to take a closer look and focus on the impact of financial technology, of fintech, across the region and seek perspectives from different institutions. I've got a good panel of 3 gentlemen who are going to give us and share their perspectives on financial technology. You know, now just a little bit about Africa, maybe for those of you or for those of us who are coming from outside the African continent. Fintech is actually turning traditional banking on its head and disrupting the way we on the African continent are managing our money. Digital innovation can lead to lower operational costs, from automation to digitization and transaction migration. So we are looking at an opportunity that we cannot take for granted. We just have no choice but to play into it. Financial technology is one of the fastest growing areas for venture capitalists. I don't know how many venture capitalists we have here today, but I hope we're going to be able to learn quite a bit. So allow me introduce my panel to the stage. He is the CEO for UBA East and Southern Africa, and has more than 2 decades of banking industry experience in diverse core function areas. Ladies and gentlemen, Mr. Emeke Iweriebo. A round of applause for him. And we have Samuel Makome, who is the Group Chief Operating Officer for KCB Banking Group. A round of applause for him. And finally, Wayne Ngambi, who is the Chief Digital Banking Officer for Zanaco. He has a career spanning 11 years as a sales executive, rising from information technology into the sales arena. Well, welcome. A round of applause for him, too. I think I should take a seat. So, gentlemen, thank you so much for honoring the invite to take part in this conversation. For those of you who are using the Hover app, the agenda is right on the app, and we are not taking questions from the audience because we are trying to make use of technology. So if you have any questions you would like to ask, head down to the Hover app, go to the agenda, and look for this session. That is the Africa Hard Talk session. That is the Leaders Dialogue that was meant to start at 10:45. It's now 12:05. We hope we can actually use 25 minutes and reserve 5 minutes for Q&A. So head down there and ask whatever questions that you would like to share with the panelists. So I would like to start with all 3 of you.
On how emerging technologies have affected financial services. I think quite a lot has happened in this space, especially in the last decade. And even beyond that, we've seen a rapid evolution of technologies and even financial service solutions being provided. Remember back in the days, remittances, you had to go to the bank, agree a time when the funds will be sent, and you collect your funds from a designated teller. Now, all that has changed. Payments are made electronically, they are received electronically, they're even spent electronically. So sectors have been impacted significantly by the evolution, development, and use of digital solutions in our markets.
All right, Samuel?
Yes, I think for us at KCB, I think we've seen a very significant impact of the new technologies. I think one of the most impactful for us has been the mobile technology. Of course, there are many. There is mobile, there's internet. But if we look at over the last 10 years, KCB in Kenya was established over 100 years ago. And it took us 100 years to open 1 million accounts. And it sounded like a very big achievement when we got to 1 million accounts. But when we then got into what we call M-banking, mobile banking, and with that we launched M-banking about 5 years ago. Within the first 3 or so months, we were able to open 3 million accounts. So what we did in 100 years, we were able to do in 3 months. So again, it just shows the difference in reach and financial inclusion. I think we're the biggest bank, but even with 250 branches, you really can't get to everyone except if you scale using different technology. But fast forward to 2015 when we partnered with Safaricom and went to KCB M-Pesa. And when we went to KCB M-Pesa, we were able to scale. We thought 3 million was huge, but we were able to move quickly to 10 million. And then after 10 million, we were able to go towards 20 million. So just a simple example that even in being able to open an account, by moving to a different technology, what you're able to achieve in 100 years, we're able to achieve within months, just by partnership and also through mobile technology. So a very, very stark difference between what you're able to do through the branch network and what you're able to scale through mobile and other technologies. Something like lending as well. I think we started mobile lending some years back. And if you look at something, the area of mobile lending, we started with a basic product. We kept on improving it. And when we launched KCB M-Pesa, for instance, in terms of the engagement with Safaricom, we are able to lend today 10 billion shillings monthly. Now, 10 billion shillings monthly is more than you can lend through the traditional banking system to all your retail clients. It's what you probably would lend maybe over a period of 6 months through your traditional means. And yet you're able to do that over a month. People repay within the month and then come back for more. So I think the digitization of all the basic banking products, whether it's lending and whether it's opening an account, and finally even in payments. Most payments you can make, it was a very slow process, very few payments you're making. Now you can make payments across, but mainly you're moving from bank to mobile and bank to bank accounts. So I think in a nutshell, the basic products that we were offering have all been digitized to a large extent for the retail bank, and we are seeing a very, very significant change because of technology. But of course, what we see really is just a tip of the iceberg, and we're saying if we can do this, how much more can we do in terms of, earlier Sitoa mentioned about 80% of our transactions being cash. So we still feel there's a huge, huge opportunity despite the fact that we've made significant strides in some of the areas of basic banking.
All right. Wayne?
First of all, I would like to apologize for not having a fully balanced gender panel. I think it would have been lovely to have more female perspective.
I am the female.
Well covered, well covered. I would like to also thank MAS and CBK for allowing us to...
Transactions were through queuing mechanisms. Today we have 91% of transactions are totally outside the banking hall itself.
For instance, through digital channels, will drive intra-African trade, commerce across within regional economic communities. It will drive and increase industrial activities. These are opportunities for fintechs as well. So in conclusion, I will say that for us as a bank, UBA, we are ready to support the new growth phase and opportunities that will emerge in different phases and in different sectors of our global and African economy.
All right, I'm going to take a question from the audience, but on the app. Looking at the various examples from China and Singapore, fintech landscape is growing exponentially. As deposit insurers and risk minimizers, how do we protect customer deposits and give them confidence in the financial technology as a medium of saving and borrowing money? Can I put this question to Wayne?
I might, at the risk of sounding like a broken record, I think for me what is critical is being able to understand the ecosystem and what each of us plays in the ecosystem. Banks traditionally have had a phenomenal strength around ensuring that we keep customers' liabilities safe. And I believe no one in the financial industry would be able to do that much better than the banks. Whether we are good at creating innovators and fintechs to be able to manage channels, to be able to manage the distribution leg, which ultimately looks after customer experience, whilst traditionally, with the checks and balances that the banks have built over.
Bankers, that is Leo for UBA. And then there's the question of cybercrime, protection of data, and things like that, that most people give as reasons to keep away from some of these product offerings. So which of these platforms, between WhatsApp, Telegram, Viber, Facebook, and all these other social media.
For business, WhatsApp for business is a new secure platform, very clear of protecting the customer integrity. I think ultimately, and just touching even on the print itself is secure.
Right.
You have a PIN, you have a way of accessing, you have a way of validating, but the resources are somewhere. Even when we have partnered with Safaricom, like even we talked about the lending product, they are giving us a powerful channel. But in terms of us protecting the integrity of the lending system, in terms of the integrity of the customer, that role has continued been looked at by the bank.
Right.
But it's an evolving area, and we have to be very vigilant because hackers and all these people keep on evolving, and as they evolve, banks and even fintechs will have to keep on evolving. Even people who have blockchain, for instance, which is supposed to be really great, have had this blockchain hacked all over the place. So I think the vigilance, the level of attention that has to go to cybercrime cannot be understated. And as a bank, we are doing significant investments in this particular area. And I think the central bank has really emphasized on this, particularly in Kenya.
All right. Emeke, also in your closing remarks, you can also talk about what the future of fintech looks like from the African perspective.
A comment on data integrity and security and cybercrime. Our regulators pay attention to cybercrime because of the evolving nature of transactions in the banking sector today. As a bank, we are conscious, we are aware of the need to protect our customers, their transactions, and their data. So what we did do was that we set up a security operations center that operates 24 hours, that enables us to monitor all transactions initiated on our systems at all times. So when there are attempted breaches of any type, it shows up on our systems immediately. So we're able to fend off, we're able to respond, and we're able to protect the customers and the bank immediately. The only thing I have to add on that is that the hackers, those who are attempting to infiltrate and damage customer data and information will never stop. So it means that financial institutions working with regulators must always strengthen their processes and respond to ensure that systems are protected and customers are protected at all times.
All right. And the future of fintech?
Like I did mention, fintech, this space is enormous. It will continue to grow. What they have done, what fintechs have done, is that today they're very agile, they're responsive, and they're more focused on peculiar solutions. Now, banks are a bit broader. Banks have to respond to the needs of a large category of customers all at the same time. Fintechs are more specific. So what I see is that there's going to be greater collaboration between banks and fintechs. It's already happening. In fact, banks are not just partnering with fintechs, banks are also investing in fintechs. This will continue, all with the purpose of being able to respond to customer needs and serving customers at all times.
Wayne? Briefly?
For me, I think we are at the midst of the fourth the industrial revolution. We're right at the cusp of the industrial revolution. And right now, it's all centered around digital, whether it's cryptocurrency, whether it's open APIs, whether it's creating an enabling ecosystem. I see fintechs as a key component in driving the change that we are currently undergoing. So there is a lot of collaboration that's already happening, but right now most traditional players, when you look at the demographics of the traditional players, you've got the big Googles, you've got the traditional laggards, the players, the traditional bank, and then you've got the fintechs. Within those three, whether we choose to embrace it or not, I think it's something that has already picked up its own momentum. So for me, the future of fintech is very, very bright and is a key catalyst to the growth for the digital evolution.
Thank you, Joy. Thank you very much. Ladies and gentlemen, as we were speaking innovation and adaptation and all the changes that are happening, allow me make some changes to our program. So we are adapting to change with the technology, and we've made some adjustments. So what will happen is the next session by Leslie will happen here. At the same time, the other 3 parallel sessions will begin. So we'll then have 4 parallel sessions taking place at the same time. And that means we will be having about 4 sessions. There's the 1 p.m., which is technically what will happen now, 2 p.m., 3 p.m., and 4 p.m. Why? Because we will be back here by 4:50 p.m. for the inauguration with His Excellency the President. And so the reason we are making this adjustment is to allow for us to be set for the inauguration, which is really the opening ceremony with His Excellency, exactly 4:50, because he will be on time. So the moderators for the sessions, please help us manage the time, but we will be also managing you. As Leslie will be taking stage for her session, the other 3 sessions on technology for tomorrow, social impact, and the spirit of innovation. So the different sessions on those 3 are happening behind us. The tent behind us, there's 3 rooms in there. When Leslie's session is done, those of you who've been in this room and would like to join the other sessions, you can then join and continue with the particular session you will be interested in. All right, so I want to invite right now Miss Leslie Gore. Miss Leslie Gore. She is the World Bank Senior Technology Advisor and Fellow at Cambridge Center for Alternate Finance. Welcome to also introduce your panel.
Good afternoon, everyone. It was morning earlier, so I have to adjust my time. Thank you so much to Monetary Authority of Singapore and Central Bank of Kenya for the kind invitation to be here. I am so honored to come to Kenya. It's my first time. When everyone talks about Kenya, I think about M-Pesa. And so it's with great joy and wonder that I am here to experience what it is like to know about the fintech revolution that started many years ago with M-Pesa. And today, we're going to have a very interesting session. First of all, the first few minutes will be on the overview of fintech and based on Bali Fintech agenda, and then followed by Miguel, who's my colleague and my husband. This is our first fintech couple. He is in our household. He is the fin, and I'm the tech. So we'll give an overview of the fintech agenda, and then he will be talking about green finance on the intersection of fintech and energy access. And then we'll have the panel after that to grow deeper into the transformation of fintech and how we cross-learn from Africa and Asia together. We're waiting for the slide deck to load whenever you get a chance to bring it up. So a couple weeks ago, I was in Cambridge University, where I'm a fellow, and we were talking about the whole fintech agenda and how it has come a long way from where it was. The idea of borrowing, payments, borrowing, lending, what else is there? Savings and insurance, huge potential. But it has come a long way in the last few years, and the impact of people's life transforming the people, especially at the base of the pyramid, is significant. That's why it's quite exciting to learn from around the world where are the key progress. In Africa, of course, there's huge momentum behind the payment frontier, and we learned from M-Pesa and Safaricom today some of the impact to the people who are making a change in their lives. And in Asia, we've learned from also from our friends at Ping An about how technology has changed so much in ways that impact the different parts of financial services. And financials reach over 1 billion users so far. It's amazing, using the mobile money and 9 wallets around the different parts of the world. And then ride-sharing company now touches upon so many people's life, converting into cash in and cash out, in Gojek, for example, and Grab in Singapore getting a mobile license. These are amazing changes in the fintech space, not happening in the traditional banking environment. We're still waiting for the slide deck to show up. So I will continue speaking until the slide eventually show up. So the wonder and the opportunities of fintech is significant, but yet we are still a long way to go in terms of going mainstream. My job at the World Bank is to advise our member countries to look into technology, whether it's AI, blockchain, Internet of Things, but also in cloud technology. How could we tap upon the cloud technology and using that and touches upon people's life in many ways in the developing world? And so I'm passionate about this. Last year, we launched our first bond on blockchain together with our former treasurer, who is now in the audience, Aruma Ote, who's also a dear friend and mentor as well. We also look into technology where we could use that to help bring together different key stakeholders. For example, AI for Famine. We bring together a whole multitude of partners from around the world, bring together public-private partnership. So that, as you can see, there's many ways where technology can bring key stakeholders together and affect development agenda. Since the slide is not up, I will continue to talk about the Bali FinTech principles and agenda. So last year at our annual meeting, we launched 12 guiding principles related to the policy elements for FinTech. We focus a lot on how we can manage risk and harness opportunity, advising our member countries to help them progress along in this journey. These 12 elements anchor upon 4 key pillars. The first pillar is to create an enabling environment for FinTech. The next one is to strengthen financial sector for policy framework. And the third is around addressing potential risk and improve resilience. And the last is using the collaboration around the international bodies to bring about the change that is needed for impacting people's life. So all 4 pillars are critical and important to drive the whole Bali FinTech agenda. So a year later, what have we learned from all that? Well, there has been some surveys done recently, and we published a paper. In the slide deck, you'll see the paper that was announced this summer to showcase what have we learned and what conclusion. The other important thing is funding is critical for the small, medium enterprise gap. And what is also important is the government's play in this whole thing around digital government services, using digital mobile payment to help the G2P, the government-to-people transaction, using the social protection channel as a way to reach the citizens, or for people to make payments using for taxation to government. These are areas where there are huge uptake in mobile payments. The other area is around the national FinTech strategy. This is an area where many of the respondents talk about having a strategy together. And they're also putting programs in place to help build capacity for their government officials and also to train the next generations of workforce coming into the market. Well, at Cambridge Center of Alternate Finance, we are actually putting together an OECD training course to help regulators build capacity in the FinTech area. The other part of the survey that came back is around the gaps in regulatory frameworks. One is around cryptocurrency, especially around security settlement systems, and cross-border payments. So this is where the World Bank can really play an important role to bring together public-private partnership and strengthening the ecosystem in order to create the whole value chain. And also looking into development institutions such as ourselves in collaboration with other multilateral to bring forward the maturing of the technology and going mainstream and impacting these key agenda. World Bank has focused on a few key areas around digital identity using our colleagues in ID4D and put together over 250-page specifications on the standards and interoperability for digital identity. We're also focusing on GovTech agenda to help drive greater transparency among government agencies and interoperability among the systems.
City at all. And this becomes a major problem, specifically in places where you don't have access to the grid. In fact, 85% of those people who do not have access to electricity are in rural areas. And most of those people actually live on the African continent, in South Asia and Southeast Asia. So, given that perspective, how can we address this access problem to electricity, and how does FinTech play a role here? The essential way of providing access to electricity when you're not close to the grid, and has worked very, very well so far in Africa, is off-grid solar. Off-grid solar represents not only a way to get electricity, but also do it in a very green manner and a renewable way. In addition to providing the benefits to people to have access to electricity, the impact is also enormous. What we're seeing, and from GOGLA, which is the Global Off-Grid Solar Association, is that right now, when looking at how many off-grid solar products were sold in the last 6 months of 2018, more than 4 million products were sold, which is representing a growth of more than 50% since the previous year. In fact, we're seeing that growth happening across the board over the last 3 years, so more than 50%. But the impact is even much more bigger when you think about the fact that you're saving more than 60 million metric tons of CO2 by using off-grid solar products. Not only that, you're also adding an additional $4.2 billion in additional income for people by them being able now to have access to electricity to be able to do work. This is one of the biggest benefits that you see by doing off-grid solar. And FinTech plays a role through a business model called pay-as-you-go, which what really essentially means is that these companies like Encopa, for those of you who are here in Kenya and has been a pioneer of providing consumers solar home systems. And these solar home systems consist of a solar panel, a battery, LED lamps, and a mobile charger that can be leased for a period of up to two to 3 years. Consumers pay a very small amount. They can do this periodically, either daily or weekly or monthly. So there's a flexibility in the payment. And where FinTech plays a role is these payments are done through M-Pesa, or they're done through mobile money or digital platforms. This is the part that makes it very unique. The other part that makes it very unique is that if you don't make a payment, the system automatically shuts off. That's really powerful. What that means is that somebody in a rural area can finally get access to electricity, and if they don't make a payment, the system shuts off, so they get immediate access to electricity without even having to take out a loan. Now, this transfers even bigger, because as people start making payments through the digital platform, you build a digital footprint. And that digital footprint then can be used to be able to provide other financial products and services for these individuals. Now, Pego Solar has developed quite well in East Africa. We find that there's quite a few companies out here in Kenya, Tanzania, Uganda, Rwanda. And it's further growing now in Nigeria and other parts of West Africa, as well as in Asia. There are close to about 100 different Pego firms out there, and they cover all parts of the value chain. Everything from being completely vertically integrated, where they are providing solar distribution and solar panels and the solar home systems, as well as the financing, and companies that are very specialized in particular areas. However, there are very key critical challenges here for the continued growth of Pego Solar. First of all, these companies require a lot of capital. And to be able to get this capital, investors have to put it in. Why do they require so much capital? Is because of the fact that they hold these solar panels in their inventory until the customer finally makes all these payments. Debt capital is essential for these companies to grow and have working capital for them to survive. But what we're seeing is that it is very hard for them to get this capital because investors have a tough time evaluating these companies. When you're looking at what these companies do, they're a hybrid, if you will. They are a company that sells solar panels and solar home systems, and they're also a financing company. So how do you classify them? They do both a financing way and financial metrics. There's a lot of credit risk that they are involved in, and at the same time, you also have to think about the performance and the operational performance. So we at IFC have actually, in the Lighting Global group where I work in, have really taken this to task and thinking about how do we develop metrics and a common set of language and standards that investors can use to evaluate these firms. Ultimately, by having these set of metrics and standards to understand the operational performance of these firms, you can then be able to look at industry metrics and benchmarks that people can use to compare against others. This PAYGO Perform initiative that we established is an industry-owned process. We brought in all the stakeholders, the PAYGO firms, the investors, the development institutions, as well as the technical experts, to be able to commonly think about how do we develop this set of language and KPIs, all around the operational performance of these firms, as well as the credit risk of these companies. So far, we have made a lot of progress in this endeavor. We expect to finalize these KPIs by the end of October, and we're going to be piloting it with a lot of different PAYGO firms in the next few months after that. The goal is that we can set a set of benchmarks that the industry accepts and uses on a regular basis to evaluate these firms to really attract the capital. In fact, we estimate that there is about a $2.5 billion funding gap in the next 5 years to be able to cover for the working capital of these firms. Finally, I want to talk a little bit about a very interesting area that we're also helping PAYGO firms with, and that is thinking about a path to profitability. Here, and as you guys have done a lot of work or looked at a lot of fintechs, a lot of startups are not profitable. A lot of startups have a very tough time to become profitable, and this is no news, or this is the same thing that happens in the PAYGO sector. It becomes very challenging when you're thinking about how do you serve that last mile, the base of the pyramid. This is where a lot of companies underestimate the amount of cost it takes to really serve the last customer, and in essence, due to the fact that you have your cost investment. We conducted a pilot in India recently with a company that makes solar freezers, a very interesting area that is also adjacent to electricity. And we're following the progress of that company over the next year or so to measure its impact and see the progress and that they're taking by adopting this structural framework. Finally, we're also doing a pilot in Myanmar, where I'm going to be going to Myanmar at the beginning of September and conducting this pilot. Overall, we see that achieving profitability is at the base of the pyramid not only applies to PAYGO, but applies to any company that is serving the base of the pyramid. So there is tremendous implications for other sectors, which we're also exploring. I know that this is not the best time or the venue right now because a lot of people are very tired and they want to eat and they want to go to other parts. But I do thank all of you who have been here right now to listen to us. Even though we don't have the technical features working very well. Let me now pass it back to Leslie so she can take you through the FinTech Hard Talk and moderate the panel on some of the very important issues that are happening in FinTech today. Thank you.
Thank you, Miguel. May I invite our panelists to come on stage to join me? Thank you.
Which is that when everyone digitizes, whoever you are, if you are digitizing, sooner or later you have to touch digital money. Sooner or later you have to touch digital money. Now, it should be easy, right? Got a room full of banks here. You guys know how to move money. It should be very easy, lots of engineers around. But actually it isn't. Anyone, let's take a food delivery app. You want to get launched, you have to tie up with banks. Your users have to have a bank account. They have to do eKYC. You have to do back-end recon. You have to do all that kind of crap. What Matchmove does is it puts it all into one platform, into a set of APIs, so anyone can be a bank. Anyone can be a bank. So we are disintermediating banks. We're putting banks in any apps. Today we're across 60 organizations across Asia. Customers include transport organizations, airlines, food delivery, dating apps, schools, universities, everyone who's trying to digitize, everyone who doesn't want to deal with other players, everyone who wants their own banking capability. That's what Matchmove does. We're growing at about 300% year on year, and we hope to, at some point, find a way to come to Africa as well. Thank you.
Thank you, Leslie, and panelists. Great to be here. My name is Gabi Afram, and as Leslie mentioned earlier, I'm a lead financial specialist based here in Nairobi with the World Bank. And the World Bank, for those of you who don't know, is a multilateral development institution, and the World Bank's groups twin aims, twin goals are to end extreme poverty and boost shared prosperity by 2030. And we believe that, as both Leslie and Miguel mentioned, that disruptive technology plays a big role and has the potential to play a much bigger role in achieving our twin goals. Specifically, the work I do and I've done in both Africa and in Asia before moving to Africa has been to combine the multiple objectives of achieving universal access with the objective of mobilizing disruptive technology to increase through fintech to help our client countries, the governments of the world, as well as the private sector and the population in all of our countries to achieve, first of all, universal financial access, second, to leverage technology to boost economic growth that is inclusive and that helps governments create jobs. With this vision, and I will talk about it later in my interventions, the World Bank Group and the African Union have launched an initiative called Digital Economy for Africa that tries to combine these goals, where fintech is a key pillar in achieving the objective of supporting rapid growth that is inclusive, innovative, and creates jobs and makes services, affordable services, available for all. Thank you.
Good afternoon, everyone. My name is Getsuko Kireka. I'm with MasterCard, and I'm the digital payments evangelist across sub-Saharan Africa. And in case you're wondering what card company representative is doing here, we are far from that today. We started our business, industry legend has it, in a restaurant where bankers exchanged cards as promissory notes to pay, and that is where we started off. But today we see ourselves as a fintech and a global fintech by many standards. And our core business, which is the traditional business that is well known to most people in Middle East and Africa, contributes about 60% of our revenues. And the rest is from new revenue services, etc. And basically, where we see cash, we go after it, and that goes alongside with our mission, which is a world beyond cash.
Thank you so much for the introduction of the areas that you're focusing on. I would like to ask Gabby, since this is an area that you have already done a diagnostics for Kenya and you're focusing on Africa, could you share with us what is the current landscape right now for fintech in Africa?
Thank you. As you mentioned, we've launched this Digital Economy for Africa moonshot recently, and we have done diagnostics so far in around 7 or 8 countries in Africa, including Kenya, Rwanda, Zambia, Mozambique, Nigeria, Senegal, and I'm sure I've missed a couple of others. And what we've seen is that there is a lot of change happening in Africa. Only between 2014 and now, the share of adults with a mobile phone has doubled, and to around 21%, which is with a mobile phone that use mobile money accounts has increased to 21% of the adults, which means that sub-Saharan Africa has the highest share of adults with mobile money accounts. This is a great platform. At the same time, of the 160 million unbanked adults in sub-Saharan Africa, half of them have a mobile phone. So that's a huge opportunity to bank them. At the same time, around 30% of the unbanked adults in Africa indicate that they lack an ID, and that is the barrier to get an account. So as we look at the different countries and we try to canvass what are the prerequisites and what are the key enablers for creating a digital economy, and an economy that will enable every African individual, business and government to be fully digitally enabled by 2030, which is the objective of the moonshot. We realized that we needed to focus in Kenya and in all the countries where we did the initial diagnostics and the data is coming on 5 key enablers or foundations, I would say, for moving to a digital economy, and from that to a fintech. One is the digital infrastructure. We're talking about broadband networks and data centers. The other one is the digital platforms, digital ID systems, digital government services, digital policies, online marketplaces. The third foundational element is digital financial services, which we're here for, the fintech, and it includes both fintech and digital payments. The fourth key pillar is digital entrepreneurship. We're talking about digital startups, but we're also talking about firms themselves harnessing digital technology. And fifth, and very importantly, and in an area where we tend to forget, is digital skills, so that we don't leave behind a lot of people. I can go into more details about the findings of the diagnostics in some of the countries, but we found that there is a bit of a digital divide. There are issues related, especially in concerns about, like in the rest of the world, in Africa, concerns about privacy and fraud. And in the realm of fintech, there are also concerns about over-indebtedness and also than concerns about the role of digital infrastructure, which we can discuss, and credit infrastructure in enabling the expansion of the fintech. What we found and what we started working on with many other governments is that having an overarching digital economy policy and strategy that captures all these 5 elements and then works across different government departments and mobilizes the private sector to work towards that goal of digitally enabling individuals, businesses, and governments is very critical first key step to launching the march towards creating digital economies. And the last observation is that the landscape varies across different African countries, with countries like Kenya in the forefront, especially on fintech and digital payments, but also the great opportunity of leveraging the technology, digital IDs, and mobile penetration to create economic prosperity is very clear. Thank you.
Thank you, Gabi. During the chat in the speakers room, I was talking to Gituku about what MasterCard is doing in Kenya and the rest of Africa, and you heard about some of the opportunity and gaps. Maybe you can share with us some of the areas that you're deepening the mobile adoptions and digital frontier that MasterCard is working on.
So alongside that, what it helps us do basically is to bring banks together. We target banks and we target merchants as well. And that is a program that is run now for 5 years and we're extremely proud of. In terms of what else we're doing in this space closer to home, in that sub-Saharan Africa, in regards to digital payments, our focus is largely on mobile-based payments. What we define as digital, by the way, for Middle East and Africa is any non-plastic payment, whether it's face-to-face or remote. So that would mean any mobile-based payment, any NFC-based payment, whether it's been done off a mobile phone or a wearable, e-commerce as well, and also what we term as new flows. New flows to us presently include business-to-business payments, cross-border payments. We're invested heavily in cross-border, and that's a business line that we're driving a lot in this, particularly in this region. And so through mobile-based payments, we're able to take advantage of what consumers in this market are already accustomed to.
And I think, when you look, in addition to that, obviously, part of the investments that we make, or at least what I do, is I run an international fintech portfolio that also comprises many of the areas of effectively financial services, including payments, asset management, banking, FX, blockchain, insurtech. So I think the parallels you can draw between or among those things with Africa is that there is actually quite a big opportunity here for creating an ecosystem. Essentially, Rakuten originated about 20 years ago as a company focusing on third-party e-commerce for Japan only. And right now we have, I guess, our plus, which is huge. Yet, some of the issues that some of my fellow panelists have been addressing specifically pertain to both payments and logistics. For an ecosystem to work, you have to tick both boxes. And if you don't, you might have the product, but then you might be unable to deliver the product. Or you might have the delivery, the product, and you're unable to use the payments. And those are like the biggest challenges in Africa right now. I mean, specifically, even Jumia, given that a lot of the payments are effectively payment on delivery, if your package arrives and you don't know when the package is arriving, then the customer will be waiting at home or at their office to pay for that. Right, which I'm sure that the World Bank is also, or the IFC are looking into, is to create very efficient logistics for all these services to be combined. But it is possible. That's a good news, and it's a huge market. It's a great market, and it's a growing market.
Thank you for sharing the insights. And I would like to turn over to Shailesh to talk about the market that you're covering. You mentioned 7 Asian markets and dealing with different regulators and some of the challenges you've gone through and overcome as well. So could you share some insights with us?
Sure. Can I check of anyone who hasn't gone to lunch yet? How many of you are regulators, please? Regulators? All right.
They all went to lunch.
I'd like to talk to you directly, please. The rest of you change the structure. What I'm referring to is the fact that we're sitting here talking about financial inclusion. We've got great reports about, mobiles growing, everything else. Which one of us has the ability to influence that? We're going to come back next year and say it was 30%, now it's 50%. Great. What did we do? Nothing. And yet, when it comes to payments, we rely on this technology to make that happen. So here's my recommendation. Forget about Ministry of Telecommunications. Forget about Ministry of Finance. Forget about all of that stuff. Get together in the government and fix this so that you can say, for example, that telecommunication should be a fundamental right, like electricity, water, everything else. Stop saying to telcos, you need to make money and invest in 4G and 5G. 3G is good enough for financial inclusion. So stop making them chase this kind of stuff. There are many, many things which governments working as broader regulators should do. So please, regulators, you have a very important job. You can be an accelerator. But instead of sitting and watching and saying, what policy should we do, what payments bill should we do, turn around.
Learnings from Africa and learnings from Asia, and where are some of the cross-learning opportunity? We heard this morning from the keynote speakers, there are great insights from both regions, but perhaps some of you can comment on that and share what are the learnings that
in different countries across Asia or even in Europe, through the creation of certain sandboxes for fintech. But eventually what you're going to have to do is, well, again, make sure that the regulators create, I guess, certain common policies across the markets to make that work. Then second, to create sort of, pan-African ecosystems. And, well, Leslie and I were talking about before how, or I mentioned the Jumia example, but, well, here very much in Kenya itself, we have Safaricom, who have also announced their very grandiose plans to become more of an e-commerce play or to create their own ecosystem, are now planning on launching across 5 countries without holding any inventory, so effectively creating marketplaces. And they have been obviously very successful, as was mentioned or referred to by Miguel earlier on, about M-Pesa and the payment system. So again, success will come from volume, success will come from parties cooperating each other, and as far as startups are concerned, and startups are essential for an ecosystem to work, it will come down to how well existing players and smaller companies can coexist and cooperate.
Well said, because I believe in that concept of partnership is very important. It's no longer just fintech taking over the incumbent, but actually the collaboration and cooperation is just as critical to build new marketplace and new potential. I think this is one that I wanted to poke further in terms of the new potential. Shailesh, you mentioned earlier, you see your company, Matchmove, as a platform as a service. Think of your company as a water and takes different forms and being very fungible. Maybe you can elaborate on that, because it's a very interesting concept. It cuts across different sectors where the technology, your company is using that as an enabler to empower different sectors to come together easier with banking in a box, so to speak, right?
Yeah. Thank you. So, yes, we were talking about this. The way we're positioning MatchMove is a bit like water or electricity. We're of the view that, you know, there's going to be lots and lots of digital devices, right? We got phones, we got lights, we got aircon. Everything needs to be charged. It needs electricity. In the same way, we're positioning our platform as if everything is going to need digital payments with electricity. We're going to make it easy for you so you can operate your product, do what you want. We'll take care of the difficult payments stuff. Now, what is this difficult payment stuff? Regulators, for sure. Regulators can be your best friend or your worst enemy. And that's just part of it. The other is the technology, security, anti-fraud, recon, foreign currency.
Unintended consequence of technology, putting together biases in AI algorithms that could then create a digital divide for people whom we are trying to serve at the base of the pyramid, because now the biases in the algorithm actually put them further behind than previously before being part of the digital economy. Can you comment on that? Because this is an important topic for socially responsible finance for sustainability. Any one of you, please.
Go ahead.
I can take a stab, and I think this is one of the things that we observe as we work in different countries and in different jurisdictions, that the landscape is very different. For example, even in the case of Africa, internet penetration is still 22%. This is in 2017. So that's very few citizens still actually have access to digital IDs, which is an important tenet for digital economy and for digital financial services. Startups still struggle to attract funding. So we find that there are elements that exist of the digital divide, and the opportunity for growth should not exacerbate this digital divide. So that's why I think what the other panelists mentioned resonates, is that you need to bring basically you need a comprehensive approach to this. And when you talk about the private sector and the government and let innovation grow. So the concerns that you raised are something that resonates with us, and approach is important, and as we mentioned earlier, also a collaborative approach. We need to always be mindful and that there are many players and many stakeholders, and while competition is useful at many instances to reach everyone, there has to be collaboration and
parting remarks, starting from Jitu, please.
Thanks. And again, I think I'll address or talk to the bit about regulation, and I hope we still probably have some here. Or we might have some bankers who are also driving regulation internally. I think one of the things that is very critical is to think about what is it that we're really solving for, right? The consumer is the one who, at the end of the day, we're trying to provide some solutions for. Either it's better payment experience, better or new ways of consumer authentication, new ways of risk management. And I think it's very important that to be able to drive an innovation culture that is also well balanced in respect to needs and risk management. If we had more collaborative exchange between those who are driving innovation and those who are seated in places of regulating it or managing risks. And we do need to drive some culture change where even we get people probably doing secondments between the different units. I think that's very important in terms of getting people on the regulatory side, on the risk management side, more comfortable with what is happening in respect to demands from consumers and what those on the fintech and innovation world are trying to achieve.
Actually mentioned the digital economy for Africa moonshot and its initiative with a target of the year 2030, and the World Bank Group is planning to put around $25 billion in this over the next 11 years, and we hope to leverage the private sector players to bring in as much, if not
a very young, growing population. Even when you look at the stats, right now there's about 250 million smartphone users in sub-Saharan Africa, expected to be 690 by 2025. That tells you, like a market that's going to effectively like treble in about 6 years. Yet we cannot forget infrastructure.
Thank you so much for the esteemed panelists. In summary, I learned a few things from speaking to you privately and now on stage. There are three key takeaways I see. Innovation is fast moving in the digital space. You gotta be in it and continuously learn from it. And the idea that innovation can be cross-learned is definitely the aspiration, but you have to learn it by doing it and also being agile and trying it out. And the message to regulators is that of having that mindset shift to be able to empathize the life of fintechs and startups community and trying to make sure that that ability to adapt to changing times and also being open to some of the blockers and helping the innovation and fostering innovation while managing risk and challenges that they have to deal with as well for regulators. And of course, partnership. It is key to all the things that we do to amplify the impact further with public-private partnership. I think this has been the key message that I'm taking away today. Thank you so much for sharing your insights. Let's give them a round of applause. Appreciate that. Have a good lunch, everyone. Thank you.
So thank you to that panel, and thank you to those of you that are still with us here in the plenary session. At this stage, we've already begun our breakout sessions, which are exactly behind you or right in front of me in the long white tents. So find your breakout session for the sessions that was beginning at 1 o'clock. If you look at your app, find your session there. You're able to go in there. If you need a bite to eat, you can grab a bite at the village. There's food of all kinds, Afro-Asian and other such cuisines. But otherwise, please find your breakout session. There's one going on right now, and there's another set that starts immediately after that. So if you're able to find those, find them there. We'll ask, if you may, to please carry your things with you. Please carry your bags and other such things with you, just because this room, from this point on, will be fairly empty. So if you're able to carry your bag with you, please carry it with you. But for now, your breakout sessions are in the rooms behind you, plus also, if you want to have a bite to eat or a drink, they're out at the village. Thank you very much. Me again. Now, it's not voluntary that you clear the room. You actually have to clear the room. And I'll tell you why, because the security for our guest of honor who's coming this afternoon will need to do quite a bit of work in here. As you'd understand, there's quite a bit of security that needs to be done here. So please, if you don't mind, you can go grab a bite to eat. You can go for the breakout sessions that have already begun. But if you may, please clear the room. Carry your bags with you. Carry your bags with you because there's a lot of work that's going to be done in the next few minutes to ensure that our guest of honor is safe and secure. So carry your bags with you and please clear the room. We shall actually be getting everyone out. If you have your cameras and other such equipment in place, you can leave one person in case they need to ask you questions about your tripods and things like that. But all our guests, if you may, please leave the room out the doors. You can go to the breakout sessions, or if you haven't managed to grab a bite to eat, lunch and refreshments are at the village. So if you may, please do so.
Check. Check. Check, check. Unmute. Gooseneck. Check. 1, 2. Bado kidogo, but
just prepaid. Ukiona chuma saizi unakula. But now the problem is unakula na wiki. I'd rather, in fact, let's wait. Unatuweka page za Uhuru, za nani, za hawa watu wote. I'd rather send one other tools and assume that they are free.
Hiyo ningetaka unaongea naye ama nani? Yaani yeye amefika. Sasa huyo hapo usome swara hata maana ndio. Babi, Yvonne. Yvonne. Kama na yeye huko. Kisha watu wote mgao mbili. Yes, madam. How are you? I'm fine. How are you? Yes, I'm doing fine. Michael was busted from. Is your done your trip? Yes. Yes, in a minute.
Is it? No, it's not.
Stop it.
Yes. It's not on.
When is on?
Oh. You advise me.
What?
Tell me. So tell me what you want. Michael, put yours. More than 10.
Distinguished ladies and gentlemen, I seek indulgence that I make an announcement that we are glad that we are all here for the inaugural ceremony of the Afro-Asia Fintech Festival. It is to my belief that you've enjoyed the hospitality so far since you joined or you came to Africa and Kenya at large, and more or less Nairobi. We are expecting our principal guest, none other than Honorable Uhuru Kenyatta, President of the Republic of Kenya and the Commander-in-Chief, who will be joining us any moment from now. Our request, we shall observe a few house rules in order for us to give the respect that the function deserves. It is a state function, it is a national function, it is an international event. So a few norms will be required for us to give what befits the function. I will be inviting you to remain standing when His Excellency the President will be joining us with his entourage. And it is our culture and our good gesture to welcome our principal guests with a lot of applause. It makes them feel they are welcome and they are in the right place. So when the President and his entourage will be joining the auditorium, kindly, it will be prudent for us to be upstanding and I'll applaud them. They all feel nice when we applaud them as they join us to do the inaugural ceremony today. I like that. I'm glad somebody has gotten me very right. Thank you. That is one. Secondly, when His Excellency the President will be at his seat, we will remain standing. We'll be led with our Kenya National Police Service Presidential Escort Unit for our Kenyan National Anthem and the East African Community Anthem. Those are the two anthems that we'll be doing. And at that point, we'll request those who will be having their, someone might be having a cape in the house, a hat in the house, which is not official. It is a prayer. When we do the anthem, it is a prayer. So at that point, we'll request all of us to put them down or to remove our headdress because it is important for us to give that room unto them. After the anthem, we will be seated and the program will proceed. Thirdly, it is important that we monitor or we manage our phones. I will request that we manage our phones for the necessity of a back-to-back session that we are having. It will be very bad when the senior minister is giving his address and then so nice ringtones comes from my distinguished guests. I will propose that if you can manage it now, maybe manage our phones now, put it in silent mode, so that we give the respect that this program entails. It being the first inaugural function in Africa and Kenya being the host, we don't take it for granted. We thank you for counting us worth to come and host it here. And that's the reason that we're all here, to make sure that everything has back-to-back, seamless, and give you the best that you deserve. Did you say hi to your neighbor? Or you just sat, since the time you came, you doesn't even know whether your neighbor is yellow, blue, white, red, or pink. Just turn to your neighbor. Know your neighbor. It is important. In our country, we have what we call nyumba kumi. Nyumba kumi is know your neighbor. Get to know your neighbor. I will also come down and get to know a neighbor. Thank you. Thank you so much for that. So, when the time comes, I will signal you once the principals will be joining us. And I'm double sure this event will be the best since it's the first one of the inaugural here in Africa and in the country. So thank you so much. My name is Mike. I'll be part of the moderators. Karibuni sana. Na kuna jambo ambalo ningetaka kuongea kwa lugha yetu ya nyumbani. Wenzangu, haswa wenzangu kutoka Banki Kuu ya Kenya, bado tuna wageni wengi sana ambao hawana viti kwa sababu hapa kutajaa. Kwa hivyo ikiwa unajijua wewe ni kutoka Banki Kuu ya Kenya, umeketi katika viti vya mbele, tunaomba tafadhali, ikiwa tunaweza wapa wageni wetu hizo nafasi, ili wakaweza kuwa pamoja nasi katika sherehe hii. Viti ni vingi kule nyuma, lakini pia wageni wetu tukijaa sana, nitawaomba wenzangu kutoka Banki Kuu, pengine tutaonea tukiwa upande wa nje, lakini sidhani tutajaza hivyo. Bado tuna wageni wengi sana, wageni wa kimashuhuri, wakurugenzi wa kampuni, wageni wa kutoka nje. Kwa hivyo wenzetu wa kutoka Banki Kuu, ikiwa mmeketi katika viti vya mbele, tungeomba tafadhali mpatiane hivi viti. Mtaweza kuketi upande wa nyuma. Kukijaa pia tunaweza kuonea sherehe hii mahali kwingine. What I was saying in Kiswahili, there's still free coffee after this. So anyone who wants coffee can have it after the presidential function. Please do not turn to a Kenyan or Tanzanian to ask for translation. Thank you very much.
It's an afternoon of announcements. This one I promise I'll make it in a language everyone understands. There's quite a number of people. The music guy, I don't want to dance. Please reduce it. Thank you. Thank you. There's quite a number of people because of the amount of movement there has been in the last couple of hours. A number of people have misplaced things. So you may have left your bag in here that had your valuables. I've had at least 3 people come up and say, if you could please make an announcement. So if you do come across, and don't forget that all our little bags that we were given in the morning all look alike. So please take a look inside your bag, or what you think is your bag. If it contains things that don't belong to you, or it's the whole bag is actually not yours, please let us know. You can hand it over to myself or anyone else that you recognize as being part of the organizers, and we'll try and make sure it's reunited with its owner. So there's at least 3 people who have come up and say they have misplaced their things. They may have left them in the room when they're going off for the lunch. They may have left them somewhere and someone came and sat there and they can't find them anymore. It's possible they could have been swept up in the security check that was happening before by the presidential security. So in case you have found something that doesn't belong to you in the bag, or even just free floating, a mobile phone, a tablet, or anything of that nature, please let us know, hand it over to us. If you have lost anything, I would expect that by now you've made that known to some of us. So we shall try as much as we can to reunite property and owner. If you have lost a human being, that's a bit more problematic. Different little and large items. If you find any, do not ignore it. Please bring it to us. Let us know that you found it, and we'll try and reunite it with the rightful owner. Thank you very much.
Nataka uzime ngoma. Thank you. Mr. Joshua Sibonge from Botswana. Are you here? Joshua Sibonge, do you speak Kiswahili? No, you don't. Do you dance? After I tell you what I'm about to tell you, you're going to dance, so please come with me. Mr. Sibonge had lost his property. The property is not a human being, but we found his property. Mr. Sibonge is about to dance. So again, on a serious note, gives me very good news. Anyone else who's lost property, please let us know that you've lost it. And even better, if you do find it, please hand it over to us and we'll try and reconnect property and owner. So the first one that got lost in the morning, we've managed to get it. There's another 2 that are outstanding. Please let us know and we'll try and reunite them with their owners. Mr. Sibonge, please come. We'll have all 6 running concurrently, and we'll tell you which rooms these are as soon as we're done with that session. So the 6 will happen after the official opening ceremony, which you're waiting for the chief guests to come in. So keep that in mind. The conversations are still ongoing. Turn to the person next to you in case you haven't met them. Introduce yourself. Have a bit of networking. If you do know them, network all the same. But we shall be starting in the next few minutes.